Morning, retail traders. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. I have a feeling that a lot of traders are a little bit shook up right now because of the small pullback that we've had. And I'm going to show you, I did a video a few weeks ago about calling this pullback before it even happened. The indicator was a double top pattern at an all-time high. And then also I noticed on the yearly candlestick that we had a triple top. I've never seen anything like it where the triple top, and I'll show you that here in a second. But out of the 20 years I've been trading, I've never seen a candlestick pattern like this. So I had to safely assume that the double top all-time high and the triple top yearly highs candlestick pattern was definitely a hard resistance, very hard resistance to break. A lot of indicators out there, but a triple top is, a lot of the people that trade on Wall Street use that as an exit signal when they're in a trade for a long swing. And I've been told that by a few of them. Me, I know a triple top is a hard resistance, same as a double top. You're going to have a pullback. You might as well sell, take profit, and buy the dip. So today we're going to talk about the resistance lines and the support lines on the SPX and the SPY, which I called out a couple weeks ago. And we're going to start off with the SPX. Now I added the MACD on here, and I'm going to talk about it briefly. And I'll also put in the video below, there's a link where you can learn and study the MACD and on how to trade it. But we've called every pullback and every resistance on this trade from the beginning. If this is the yearly, so we're going to go to the 3-year, and it's a real simple chart, real easy to read once you understand what a support is and how to find a resistance. For example, back in September I wrote a song about this pullback. We had 3 black crows bouncing off the 200. It gave you plenty of opportunity to get in this trade. 3 weeks to think about getting in this trade. But 3 black crows is a bearish indicator, which could cause for a possible reversal. And I've talked about that many a times. It is a bearish indicator. And if you look it up, they'll say it's bearish. But this is called a flush out to me. And especially when you hit a moving average of the 200 SMA on the weekly, it's going to bounce up. As we started to bounce, and I called every one of these pullbacks, and then as we started to move up, I called what you call it a head and shoulders resistance. And we hit that head and shoulders resistance and pulled on back. So you've got also in this here 3 black crows as it hits the 200. You also have another pattern in here that can tell you that it's a reversal, and that's called the inverse head and shoulders. As it starts to pull back, there's your shoulder line, your left shoulder, your head, your right shoulder, and your right shoulder. And I called this reversal out. And then we came up and hit the neckline of a head and shoulders, which is another possibility of a reversal. Once you hit that shoulder line, it can pull back. And that's exactly what we did. We draw the trend line right here, move it across, and actually use the wicks, but we're going to use the bodies in this case. And it brings you right up to that top of that candle, which is the shoulder line of the left shoulder and the right shoulder in the head. So it pulls back. We called this out as we started getting close to the shoulder line of this inverse head and shoulders. She bounced back up. Now we've got a double top resistance. And I put out a video a couple weeks ago that we were approaching this double top and that it'd be an all-time high, and we might not break it, we might hit it to the penny, but it's definitely a strong resistance. And I mean strong, I mean they're going to have a pullback, and we've had a real strong pullback. So now I'm going to tell you where I think we're going to go next, and I've already mentioned it in the video 2 weeks ago. Once we hit this all-time high, before we hit it, that we're going to pull back to the 9 on the weekly, or we're going to pull back to this previous high and then come up for a triple top break into 2024. Now, a lot of these fat cats on CNBC, which they've been pumping these all-time highs. I mean, crazy highs. for example, if you look at LLY, this thing has had one heck of a run. If you look at the yearly time frame, and it's consolidated into what I would call a triple top. 1, 2, 3, we pulled back. Then we came up here toward double top, all-time high. So they're pumping this stock, and this stock has had such a heck of a run that it's scary. It's beyond scary. It's a CNBC pump. So I shorted this thing yesterday, and unbelievable, I was able to get $400 out of a contract. Should have kept on holding it. Let it run down to my moving average of the 50, or maybe come back to this triple top. What was resistance now becomes support, and you got a triple top breakout right here. So this thing could easily jump down here and bounce off 600 long. I mean, seriously. So I'm looking at the MACD. I've got the MACD here as an indicator. As we start to cross down over it's a sell signal to get into this trade. You know you're irrational when you've got a big gap between the buy and the sell indicator, and when it crosses down, it's time to exit that trade. And that's what I did yesterday. This is on the 1 hour time frame. So as it starts to curl back up, it'll be time to get back into this trade. Now CNBC's been pumping the heck out of this. Same as the way they've been pumping the market at an all-time high. They know better. They know better. Their fundamentals don't match up with mine. There's a difference between the fat cats and the private sector. So I call these people out all the time. I'm the devil's advocate when it comes to these pumps. You know, they're in these trades, so they want to keep them going, and they're starting to get a little shook up. I can see it in their voice. I was listening to them yesterday, and they're just getting a little shook up, getting angry because the market's pulling back. It's going to pull back. You got an all-time high, double, triple top. I mean, come on. It's nothing big. I mean, we're just having a consolidated period. We've had one of the biggest runs I have ever seen in the 20 years that I've traded. Okay? This is one of the biggest runs that I've ever seen in my lifetime in the 20 years of trading. And I'm going to look at the SPX and the SPY. The SPY was up 20-some% in a matter of a week or two. Hello. Traders, fundamental traders, these fat cats, they're lucky to get 10-15% a year. And they're getting 100, 200, 300% on a trade. We had an all-time bottom. So SPX. And this is what I've been saying for 2 weeks. I said they're irrational. We had a nice little run. And when we had that big gap up, and that scared me right there. That means the fat cats came in here and they just run this stock all the way up. They're saying we don't have a Santa rally. I called this Santa rally back here way before Powell came out and said he wasn't going to raise interest rates. It was a no-brainer. We're going into an election year. If you don't think it's all political, it is. These progressives love the money that's being printed, and we're going to get a lot of money printed in 2024 that hasn't even been used yet. So they're going to come out with new bills and blah, blah, blah. We got a possible government shutdown coming up because of the open border policy that the Biden administration is now involved in. And it's tearing up our cities. It's making America bankrupt. And I think we just hit $34 trillion in debt. And that's the interest alone is more than our national defense. It's way out of hand. And it's just, so I stress out on that a lot. So if we go in here to the SPX on the daily, we have one resistance here at the 21. Now we could get a little shake up with this double bottom here, and we could get a possible, but we kind of broke below that, and now we got an inverted hammer down here below the 21. Momentum's a hard thing to stop. So the next the next support levels is going to be every body of these candles. And then I think we're going to get back to that weekly support level here at 4607. Now we've got earnings coming out within a week, and I think they're going to be good. I think they're going to be better than anticipated. But economists, I mean, CNBC was pumping the market like they forgot that we were even. They've had it all wrong for the last 2 years. All the fat cats, the very few of them that know how to chart, know how to find reversals. It doesn't mean the fundamentals don't mean nothing if you can't stop the momentum. And once you hit a hard resistance, we're going to pull back. We're going to pull back. Always pull back. And they got to consolidate. We haven't consolidated in 2 months, 9-week period, where we've had nothing but a straight run. And it's just unprecedented. Wall Street has been talking about the interest rates for over 2 years. And Powell has tried to done the cycle that happened back in the 70s, where they screwed up, and it caused our country to go into a big recession. But times are different, and you cannot compare them times to the times of today. We are extremely greedy in this market. I think the money's going to go into small caps and micro caps. I haven't seen the penny stocks run like, they're so down so much in the last 2 years. And I was a penny stock trader for over 10 to 12 years, where I traded pennies every day. And I did real well in the pennies back then, but we've been nothing but in a downtrend ever since. So I'm going to be trying to figure out how to find trades in the Russell 1000. I'm going to be looking at the micro caps, and I'm going to look at the mid caps, and I'm going to start playing some of these notorious. They've been beat down so much. I'm talking about stocks that were $40 at $2. And if you go in here to your scanner, you got the Russell Midcap right here. And that's what I'm going to be watching today for any breakouts. And I might start putting a little bit of money in the sidelines there. And you got the micro futures. You got the market movers. You got the Russell Midcap. And that micro cap and mid cap. Those are the ones I'm going to be watching. Seeing if there's anything that's breaking out on these stocks. And I'm going to put me a little. Let me see if we can get here. It's like right now, we've got ATXI at 34 cents. This thing's had a nice little bounce. We're starting to form a little bear flag. So if this thing knifes down to the 51 maybe, or bounces off this here wick, I might take this trade. But I got to look at the news and see what's going on. We got CPRX, but it's had a really huge breakout and pulled back to the 200 on the 1 hour. Plug's been beat up notoriously. If you look at these charts in the past 3 years, Plug was at $60. Now it's at $429. CPRX 2211. Now we're at 17. Riot had a run of $79. Now it's 15 something. VYGR, this one here had a big spike yesterday. Sneeze, SNES, here's another good one that I like trading. Hive, Blink, look at where Blink is now, $40 stock all the way down to $280. ALT is another good one that I used to trade a lot, and it's already started its rebound here on the weekly. You got AI, it's a new one to me this year, but I've been trading it with the AI sector. I mean, they've just been beat down so much. Here's one that was at $10. Now we're at $155. Invax is another good one. Invax has had some splits and stuff. We're down here at 477. So I'm going to keep a good eye on a lot of these stocks. FBIO. And how I do that is I pay attention to the volume breakouts and the gap ups. And once I figure that out, I'll keep a good eye. I'll see if they have any news. That's the micro cap. Let's go to the mid cap. If I find it. Daku's on here. Here's another good one to watch. DocuSign. I mean, this is one that they really were pumping here this year at the beginning of the year. Oh yeah, I'm going in DocuSign long. It's a $314 stock. Lulu's had, this might be a good short to the 9, back to this previous high. Ulta. This Russell Midcap's a pretty good one to watch. I've got some good stocks in here. You got Lulu in here. Ulta is another one for perfume and stuff. Etsy's in here. TTWO. A lot of these they've already run them up. Dollar General. Getting rehabbed, getting new management. This store, Dollar General's turned out to be a dump. Their stores went way out of understocked, and they're filthy. So they're going to clean that up a little bit. MCK's got a bear flag. We could possibly pull back on this one today. We had an all-time high on this one here. Yeah, I think this could pull back. Merck was another one that was popping. All these stocks that have popped, like Merck, this is irrational exuberance. We're at 108 and it runs all the way up to 117 in 3 days. We hit my hard resistance, so this thing could pull back and maybe a 50% retracement on this breakout. Come up here and put your fibbies in. Go to that all-time high right there. So maybe around 113, short it to this ascending triangle right here. So there's a lot of good opportunities. Don't try to overdo yourself if you don't know how to trade. Yesterday I screwed up. I'll sit here and tell you it's one of the worst days I've ever had, when it could have been one of the best days, because I called out these puts. I got in LLY and I traded it, got a couple hundred out of it. It ran up to $1,000 from where I got in, 585 on an option. Then, there was another one. Oh, the SPX. I could have made 50,000 on the SPX yesterday. I was so pissed off. I called the reversal on the SPX. I traded a put and I scalped it, and then I got back in it again. One of the ladies in the room mentioned, Jim, you think we're going to hit this 200 SMA, which I talk about a lot. And so yesterday I called it out right here, and then we hit the 200 up here on a triple top, 1, 2, 3, and boom, she did nothing but nosedive, and I scalped it for a small percentage. And I could have had, this thing went to like $3,000, a $270 call, went to $3,000. And I had 10 of them, and I'm just beating my head. It could have been one of my best trades ever. It got me so upset. I'm sitting here, I'm doing this live, and I'm in the room live, and I'm on YouTube live, and I got stuck in a call. And that cost average down, and I ended up taking like a $300 and $400 loss on the trade, because I thought we were going to reverse at an indicator, and it just didn't do it. It just kept failing, and I kept adding and adding. Before you know it, they're down 800, 900 bucks. So I had to really stick with it and add on. It's one of the worst things you can do when you're in the downtrend. And if I'd have held it today and wake up this morning, this thing probably. But I do the same day option when I'm trading the stock. That's the only one I do. So that's it. We're going to go ahead and go. I just want to emphasize the MACD and that we're in a good downtrend, and don't try to fight the trend like I did yesterday. This is probably one of my worst days of trading because I was so right and then I was so wrong. I have a good anchor and I'm finding resistance levels and reversals, and then sticking with the plan that I've already shouted out for a couple of weeks, telling everybody be careful, be careful, be careful. And here I am not going with my strategy and going against it, and that was a big mistake on my behalf yesterday. So I'll get back in it today. I talked about the philosophy and the psychology of being in a bad trade and waking up the next morning. You just got to kind of write it off and start fresh. Now, I'm a trader that trades only one trade at a time. I don't want to get stuck in this volatility. I mean, I could be in a trade and be up real nicely in a trade, and then the next day a downgrade comes up because it's too expensive, and that's what's happening. Apple. You had Apple. I mean, they're pumping the hell out of this company, and Apple has a bad reputation of holding its gains. I mean, it doesn't, for one. Many years, Apple was the one that you wanted to try to avoid unless you were going very long in it. And it was one that was and just here lately, it's caught the momentum of the AI. And you get all this bad news on Apple and never get pumping. CNBC's pumping the hell out of this because it's a market leader indicator. It has a big market cap. And I'm saying, no, I ain't. You got a ban. They banned the iWatch. And then now there's something about the phone or the iPad. So we're about to hit the 200. Now we bounce off the 200 all the time. So this today, or maybe next week, this is going to be a great trade to go long and run it up to the 51. There's a lot of people stuck in this stock that are holding on to it because it's been pumped so big. And I 2 weeks ago, I said no. Why did I say it? Because we were at a frickin' double, triple top all-time high. Any fat cat will tell you that a triple top is an exit idea. 1, 2, 3, boom. 1, 2, 3, boom. So remember the triple top. When you get up here close to a triple top, double top, off the wick, I mean, it didn't want to go no higher. It was a great short. And I alerted the room. I said, man, get this thing and take it down to the 21. We're not going to hold this. It's an all-time high. And they're pumping the shit out of this stock on CNBC. They were counting on this thing to break so the whole market would break with it. That was their game plan. And I'm saying, no. The SPX is at a double top all-time high. You've got a double top on Apple. We're not going to break this. So as we approach the previous high, which is right here, which was the triple top, this thing can start to balance out and come back up and break that triple. 1, 2, 3, and move on out into earnings. So we had to consolidate. This was too big of a run, too fast, and it was a great Santa Claus rally. The CNBC comes out here and says, well, we pulled back, we didn't have a Santa Claus rally. And like hell if we didn't. We had one of the biggest runs I've ever seen in 2 months of trading stocks. So that's it. I just want to emphasize how important it is to recognize a double top, triple tops, and how to kind of take the MACD and use it in your favor. As we start to cross down, this could be a negative sign, or if we start to level off, we could start to reverse to the upside. And that's it. Retail traders, be patient. Trade stocks that have a lot of cash. As they pull back, they could be a great opportunity to get into these trades. And I'll give you one example that I haven't mentioned yet. That's Meta. Meta did not make it to the all-time high. So there's a lot of room for this thing to run up. Now you're going to use the 9 and the 21 as a buy indicator. As we came down and touched the 9 yesterday, this week, and if we go to the daily, let's stick with the week. As long as we hold the 9, we can bounce back up, break this resistance, and hit that double top. If it does fail the 9 on the weekly, it's a sure thing that you're going to come down here and see this 21 and balance it right around the 317 area. And if we go to the daily and look at that indicator, we're definitely starting to squeeze between the 21 and the 9. Now, if the 9 starts to cross down more, crosses the 21, we're going to hang down here and hit this moving average, the 65 or the 51. She likes bouncing off the 65. So it could be a good little trace back down here to the 65 and then take it back up. But there's a lot of good opportunity out there right now. Like I said, yesterday could have been my biggest day if I just stuck with my plan. Biggest day in trading ever. And I didn't do it. I had a lot of calls. I had 10 puts. I mean, that could have been $30,000 in my pocket. Not counting the one I had earlier. So if I'd have kept both of them, oh my, it would have been a $50,000 day. So that's it. Retail traders, study that MACD. I'm going to have the indicator down here to where you can watch a video on it. You can learn about it if you're not trading with it. It is a good indicator that traders use, experienced traders. It's a great swing trade indicator. If you get the crossovers, you know when to get in and when to get out. And we'll just go ahead and leave it at that. Everybody have a great day. Where I talk about chart patterns, moving averages, and being in the now.